Hello friends, in the series on income tax cases, today we will discuss a very important case which is related to the principles for imposing penalty on the assessee. The main issue before the Delhi ITAT E-bench was that if the assessing officer records its satisfaction in the assessment order that there is underreporting on the part of the assessee, but at the time of passing the penalty order, if the penalty order is passed on the allegation that there is misreporting on the part of the assessee, so whether these type of proceedings are valid in the eyes of law. This issue has been taken up by the tribunal in the case of Mideast Integrated Steels Limited versus Assistant Commissioner of Income Tax. This case is reported in 126 ITR Tribunal at page number 653 and the date of the judgment is 7th March 2025. In the present case, there are two assessment years, assessment year 17-18 and assessment year 18-19. When the assessment was done, some additions were made. Some additions were related to the late deposit of employee share of ESI and PF, and some additions were related to the addition which were based on ad hoc basis. The assessing officer, while passing the assessment order, recorded satisfaction in the assessment order that there is underreporting on the part of the assessee, but after passing the assessment order, the penalty proceedings were kept in abeyance till the disposal of the appeal by the CIT appeal and tribunal. When the additions were confirmed at the level of tribunal, and when the assessing officer was hearing the matter regarding the penalty proceedings, the assessing officer passed the penalty order by imposing a penalty of 200% of rupees 1.26 crore for misreporting by the assessee on two grounds. One ground was that late deposit of employee share of ESI and PF, and the second was ad hoc additions made by the assessing officer. When the matter was before the CIT appeal deleted the total penalty which was levied on the basis of late deposit of employee share of ESI and PF, but he partly allowed the assessee his appeal regarding the penalty for ad hoc additions. Both the revenue and the assessee filed the appeal before the tribunal, and when the matter was heard by the tribunal said that in the present case, first of all, in the penalty notices, the assessing officer has not specified the limit, that whether the penalties are going to be imposed on underreporting basis or for misreporting basis. The tribunal also observed that when the assessment order was passed, in that assessment order the satisfaction was regarding underreporting of income, but when the penalty order was passed, it was for misreporting of income. So the tribunal was of the considered view that in the present circumstances the penalty is not levied validly. The tribunal also said that when the assessment order was passed, then the issue of late deposit of employee share of ESI and PF was highly debatable, and it is a settled law that on the debatable issues the penalty should not be levied on the assessee either for underreporting or for misreporting. The tribunal also said that it is also a settled law that when the additions are made on the ad hoc basis, like some percentage based addition for the telephone expenses or conveyance expenses or entertainment expenses, then in that case also it is a very settled issue that when the additions are made on the ad hoc basis, the penalty should not be levied on the assessee. So on these three grounds, first, the issue was debatable. The second, the additions were made on ad hoc basis, and the third, that the ESI and PF matter was highly debatable at the time when the assessment order was passed. So on both these grounds, the penalty is not leviable on the assessee because the penalty notices were not clear about which limb the assessing officer is going to impose the penalty on the assessee. At the end of this video, once again, I am repeating the name of the case. The name of the case is Mideast Integrated Steels Limited versus Assistant Commissioner of Income Tax, and this case is reported in 126 ITR Tribunal at page number 653, and the date of the judgment is 7th March 2025. Thank you, friends.